What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, I want to go over the trade that I took on Thursday, which is today, in the New York session, all right, on the DJ30. I'm going to walk you through the simple daily process, all right, because once, as Stacy says, the penny drops here, you're going to be much better off. Okay, I'm hoping to open your eyes here to the reality of trading Stacey Burke's system as simply as possible. Okay, any day that you come to your chart and you are thinking of taking a trade, you should be following the same simple daily process. Okay, so when we come to our charts, for example, the chart that we're looking at right now, this is the 5-minute chart of the DJ30. This is what I saw when I first woke up and I opened the charts. All right. This is going into about 7 o'clock New York time. All right. This is the price action of the day. So currently, all of this price action is taking place inside of the previous day's high and low. So there has not been a previous day's high or low broken. In other words, we are on the inside. And when we are on the inside, we are going to redraw our highs and our lows. All right. Now, Tokyo is the first session of the day. This is the session that opens every trading day on your chart. All right. Being that it's the first, when Tokyo puts in a high and puts in a low, that is our high and low range of the current day in which we are trading. Okay. So you can see here, we have a Tokyo high and a Tokyo low. That is our box that price is working inside of. Okay. So we would mark off those levels. Okay. Now, here, going into the middle hour of the London session, we break out of Tokyo's low, putting in a new low of the day level. So we would redraw our low. Okay. And now we have this Tokyo session peak formation high and a London session peak formation low, marking off the current day's high and low range. Okay. That is our box. And you can see headed into 7 o'clock New York time, we are working our way back up into that peak formation high from the Tokyo session. All right. This is the daily process. Okay. It's as simple as it gets. We're marking off our high, we're marking off our low, we're creating that box so we have some areas to reference. Okay. Now you can see here, right around 8 o'clock, which is hard to see, we just wick through that Tokyo session high. All right. But we take out the current high of the day right around 8 o'clock. Right. Once that happens, the market begins to sell off slightly. Okay. We come down, and this is before 9:30. 9:30 are these big bullish candles right here that spike back into the high of the day level. All right. So just before going into 9:30, we are trading lower. We take out that peak formation low from London. We just wick through it the same way we wicked through the Tokyo high of the day. All right. We wick through the London low of the day, putting in a lower low on the inside, which is the setup for the pump and dump. Okay. So we put in that low. 9:30 hits, the market spikes back against this little uh, price movement down. Okay, so we spike back up against that. That's sort of as like our stop hunt for anyone who got into this market early before market open. We spike back up, take out those traders. All right, the market goes sideways for a few minutes, and then we break. This is an M formation here, right? We go up, we go down, we go up, we go down. That's an M. There's a middle structure to every M. When that middle structure is broken, I'm entering that market. I'm using a 1-bar stop here, but the stop could have went up here as well at the highest point of those structural highs, but I just didn't do that. All right. And that's how we're gauging the entry. And if you're sitting there looking for a previous day's high or a previous day's low to get broken, you would miss it, right? You're like, but a daily level hasn't been broken. And you would be right, okay, from a certain perspective. But here you can see that the current day's high of the day level was indeed hit, okay? As was the current day's low of the day level, was blown right through after we pip through this pullback and then continue downward. We just blow right through it, right? So there was a daily level hit. The current day's high of the day was hit. Okay, this is a 3-session setup. Okay, now this is the daily process. Every single day when you come to your charts and you're thinking about trading, you're going to be looking to see if you have a well engineered variation of a 3-session setup. Every 3-day setup is going to culminate in a 3-session setup because the markets are fractal. All right. Your entries, like in order to find your entries, you're going to be looking for a 3-session setups and using these smaller time frames to enter the market. So even though the previous day's high wasn't hit, all right, we still hit the current day's high, which may not trigger daily time frame traders into the market to drive this move, but we still have 4-hour time frame traders, 1-hour time frame traders. All of those traders are triggered into this market when we hit this level. Okay, so this market is still being driven potentially by higher time frame traders on the day. Okay, and this ended up being an absolute banger of a trade. I ended up pulling like 75% of the position just beyond the London lows. All right, I aimed for just beyond that. Okay, this is the situation where you would use your customized Fibonacci retracement tool to measure out one full range expansion or whatever and project that on your chart, use that as a target profit. But I don't do that too often, but I just aimed a little bit below there. We hit that. I pulled 75% off. Stops are at break even when we break through this lower low on the inside. Okay. And I left 25% of this position running and we took over 200 pips today. You understand what I'm saying? Simple, bro. I am not looking for 3-day setups. I'm looking for 3-session setups. All right. I'm not counting days, but here, for those of you who might want to see it, here's a 15-minute chart. All right. Here's Tuesday, Wednesday, Thursday. It's a 3-day setup. This is the false break at the low of the week. And this is just a way to identify the structure of the market. All right. It's a pump and dump type of trade, all right, that takes place over the course of 3 or 4 days or whatever, okay? But this is our potential false break at the low of the week, meaning that Tuesday broke Monday's low, all right, so it put in a new low of the week. Anytime we put in a new weekly level, like on the current week, anytime we put in a new low of the week or a new high of the week, that starts your day count. That's your day one, okay? And you have to see what day two does. So here, day two confirms day one as that potential false break at the low of the week. And just because we have a false break at the low of the week, that sounds like you would be trying to go long because you saw that type of setup forming, right? But we can't make any decisions like that. We're not predicting the market. We don't have a crystal ball. So we still have to wait and see timings, levels, behavior of price on the day to gauge what direction we're going to be taking this trade, okay? So listen, this whole system right here of counting day one, day two, okay, we have a day three, right? 3-day setups, ACBs, like I told you in one of the previous videos, that is there so that experienced traders can identify when they have a sizable opportunity, okay? A sizable opportunity, and they are experienced. They already know about the simple daily process and have no problem sticking to that, okay? That's how they find their trades. But to size into this, you might want to have a little extra confirmation, and that's why you're counting days. But your consistency, okay, and simplicity is going to come from following the simple daily process, okay, of marking off your highs and lows, timings, levels, behavior of price on the day that you are trading. Okay, that's where your consistency is going to come from. It's not going to come from counting days and stuff like that. It's from understanding the simple daily process. I hope that makes sense. And you have to put that consistency before profits. All right. So if you're brand new and you are just completely disregarding the simple daily process and you're going to just sit here and track 3-day setups, you're not going to have a fun time. All right. You're just taking longer to master the system. All right. In my opinion, okay, you need to understand the simple daily process. Trying to learn the 3-day setup templates and how to count those days and all of that before understanding the simple daily process is like putting profits before consistency, right? And logically speaking, you must put consistency before profits because profits must follow consistency. If you have a working system that you can trust and that you can execute in a consistent fashion, okay, the profits must follow. Okay, they have no choice. But if you're putting profits first, you're going to be one of these people who maybe has a lucky streak, and you make a few $1,000s over the course of like 3 weeks or something. You have a great 3 weeks, and then you're going to lose it in a single day because you don't have any consistency in your trading. Okay, and you're sizing in, to different setups. You don't understand it. You know what I mean? So all you're doing is swinging for the fences. You know what I'm saying? That's what you're doing. All you're doing is swinging for the fences. But base hits win games. Okay. Anyway, man, until next time, I hope you continue to free your mind.